Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hello, everyone, and welcome back to the IRS Debt and Audit Podcast with Brian Loughrin. Brian is a seasoned tax attorney based in Tampa and the founder of TampaTaxRelief. For more than 25 years, he's helped individuals and business owners across the country resolve serious IRS problems, from audits to tax debt to cases in the U.S. tax court. I'm Sean O'Connor, and today Brian and I are talking about what happens when the IRS files a return on your behalf and how that can affect your overall tax situation. Brian, good to see you.
Good to see you, Sean.
This is something I'm not familiar with. I think they call it an SFR.
Yeah, that's the acronym. And it's simple, substitute for return. People say, well, what's that? And I say, well, it's just what it sounds like. The IRS has gone ahead by their software. There's nobody sitting at a desk doing it.
Yeah.
Their software has generated a tax return based upon income that's been reported for that individual. So a lot of people don't realize that the income that you earned, most places, they report it, your W-2, your 1099, because that entity paying you wants to be able to deduct that as an expense for their business. So they report to the IRS, and then the IRS computers get that. And then sometimes, not always, but sometimes the computers will do a cross-reference to a taxpayer's social security number, individual, or EIN for a business.
Mm-hmm.
And if there's no return filed, they will generate a return based strictly upon the income with what I say is no deductions. They give people the standard deduction, but forgetting that, they don't get any obvious deductions for a dependence or out-of-pocket health care or any of the things that would normally be something you could deduct on a tax return.
Under what circumstances does the IRS step in and do this? Is it just random?
It's pretty random. I mean, I'm sure they've got their software program and their algorithms and AI and all this kind of stuff to do it. It's hit or miss. Here's what happens. Somebody calls me up and they say, listen, I'm 1099. I'm an independent contractor. I'm fill in the blank. It doesn't matter. I could be a real estate agent. I could be a guy that does some type of maybe, construction related, roofer, plumber, concrete guy, something oftentimes in the construction trades. And they'll say, I got a bill from the IRS for, it doesn't matter how much, whatever, 50,000, 80,000, 300 million, whatever. And there's a mix up here because here's the thing. I haven't filed a tax return in 10 years. And this is for a couple years ago. So I don't know what's going on. Somebody stole my ID. I said, nobody stole your ID. I said, the IRS computers generated that. And they go, well, how come they filed one for, say, 2020 and 2022, but they didn't do it for 2021? Hell, I don't know. The IRS doesn't share that information. Sometimes it's hit or miss. They might do 3, 4, 5 years in a row. They might do 1 year and then not do it for 2 years and then do another year. They might do one for a year that's a few years ago and then 6 months later do one for the year that's before that one. So it's a little bit of a hodgepodge, but what I tell people is this: when a substitute for return is created, it's not done the day after the taxes are due. So in other words, nobody's going to be getting a substitute for return for 2025 in the next couple weeks. I mean, it doesn't work that way. It's usually, well, I say 2, but really 3 to 4 year lag time between the time the return was due and the time they generate a substitute for return.
Well, yeah, I mean, it's not the same thing, but I actually got an IRS letter a couple months ago now, but it was hey, regarding tax year 2021.
Yep.
Or maybe even 2020. And it was just like, oops, I forgot to pay something, and no big deal. But I mean, nobody likes getting that letter under the door, but
they don't. Well, I would say that, Sean, and that's a good point. That is a little bit different than substitute for return, but even a notice about maybe you left some income off a return, or we want to question you about a dependent that you claimed on a return. We're wanting to have you verify the Social Security relationship, whatever. Again, it's people call me, they're shocked. They're like, well, this is for 2022. I mean, my gosh, we're in the year 2026. I said, yeah, that's about right. What? I mean, hey, they don't move that fast. Right. It's a big, giant government agency, and they've lost so much staff over the last year and a half. That's part of it, but they've never really moved that fast. But what I tell people is this: the IRS is like a fully loaded freight train coming down the tracks at 5 miles an hour, okay, and you're walking along and it's behind you and you're thinking, well, hell, I'm way ahead of it and I can go a lot faster than that train. And for a period of time you can, but at some point that train's going to catch up, and when it does, it's going to run right over the top of you.
Yeah.
So don't think that because there's these lag times that it's just going to kind of magically go away. Once they kind of start the process, then they ain't letting go. Let's put it that way.
Yeah, so back to this idea of they filed on your behalf. You mentioned, I mean, obviously the companies that I'm doing business with are reporting for the most part the fact that they're paying me. Is there other information that the IRS relies on when they create one of these tax forms or
Your
returns
name and
rather?
social security number and the last address they have on file, and that's it.
Oh, okay.
That's all they need, brother. They just need to know the income. Again, it goes back to one of the first things I ever heard 20 plus years ago when I started in this. And it's an auditor just kind of looked up at me across his desk one day and he said, listen, we're the IRS. All we have to show is income. The rest is up to you or your client. It's
Hmm.
called the income tax because it's
Yeah.
based on income. That's what they're looking at. So if somebody doesn't file, the computers may sometimes, not always, but sometimes generate a substitute for return. But the thing about that is this, people say, well, look, there's no way I can owe this much. And I say, well, probably not, because they didn't give you any deductions other
Right.
than the standard deduction. So you have all kinds of expenses, especially if you're 1099. I mean, I can't think of somebody who is an independent contractor, whether they're in the entertainment business, the construction trades, real estate, it doesn't matter. I can't think of really anybody that doesn't have some type of overhead or business expense that they can deduct against their earnings. So when they do a substitute for return, they're not giving you those deductions. Hell, how would they know what deductions to
Right.
give you? So obviously they're not going to do it. Here's the key though. You reserve the right to submit an original return to replace the SFR. And so that is a thing that when people come to us, they say, listen, I'm going to get a block or hold on collections while we go about getting the original returns completed, and then we'll get them submitted. So, but when you submit the original returns, a mistake that a lot of people make is they might just go to their accountant, maybe a CPA, maybe just a tax return preparer, maybe H&R Block or those companies, or even TurboTax at home.
Yeah.
And the return may not be that complicated. It may be a legitimate, accurate return. The problem is when you submit the original to replace the SFR, where you submit it makes a big difference. So a lot of times preparers will just pull up an address and they'll go, that's where we're going to send it. And it's like sending it into a black hole.
Oh,
And then it's just like, it's almost like it's not even submitted. And so there's a little more to it than just filing the original return to replace it. But that's something that's also very important.
yeah, that making sure it goes to the right place, that matters a lot. The you mentioned, okay, so I have that I reserve the right to submit
Mhm.
a revised return. Uh, and that you mentioned, your clients, I haven't paid taxes in 10 years, Are, is that going to be a trigger for those other years?
Well, it may or may not. I mean, it's hit or miss. I mean, the thing
Mhm.
is this, when the IRS starts the process of preparing an SFR, you're not blindsided. They'll send letters, and as I've said many times, the IRS kills more trees than anybody I've ever met. They'll send letters saying, "Hey, you didn't file a return," and then they'll send another letter saying, "Hey, we sent you a letter telling you didn't file a return. You need to file the return." Then they send you another letter that says basically, "Look, you didn't file a return, and we have this income, and so we're getting ready to prepare a substitute for return. So if you don't want us to, respond." And then if you don't respond, then they send you another letter saying, "Hey, we told you we were going to do this. Here's your deadline to respond. If you don't respond, we're going to do it." And then next thing you know, they send it out and then you get it. So when people say, "Well, I don't know what's going on. I didn't send me anything." Oftentimes it's a situation where the address that the IRS has on file for the taxpayer isn't the address where the taxpayer lives or even gets mail, because the IRS works off an address either on the last filed tax return or if the taxpayer has submitted a formal change of address form. They don't work off post office address changes necessarily. People say, well, all this income's reported to my current address, 123 Elm Street, and I've lived there for, 4 years. And yet they're sending it to an address that I lived at before. And I say, well, the last return you filed had that old address. Yeah. Well, they say, well, how come they're not taking the address off the 1099 or the W-2s that are sent in? And I say they don't do it that way. They work off the address they have in their database. They don't, again, it's computer generated. So because nobody's sitting there typing it up on a keypad. They're not going to sit there and necessarily know what address to send it to. And I guess maybe the IRS figures if you're not responding to these notices about substitute return preparation, you're probably not going to respond to a notice about, hey, is this your correct address? Well, that's about the best I can figure.
Right. Yeah. Who knows? What tends to happen to the balance once one of these returns is in place, right? I get a letter that says, "Hey, you owe us 10 grand."
Well, if you have the SFR balance, you can work off that. And I've had situations where I've talked to people and they say, look, I've kind of looked into this. I could prepare the original return to replace this, but guess what? I don't have any additional deductions. I don't own a home. I'm single, so I'm filing single. I have no dependents to claim. I'm a healthy guy. Hell, I haven't seen a doctor in a couple of years. I don't have any medical expenses. I don't have any mortgage interest, student loan interest. I have none of that. So even if I did the original return, the numbers are going to be the same. And I say, well, then don't even bother with the original. We can work off the substitute for return. Obviously, though, if you prepare it and you reduce the balance, which is probably 98% of the time, the original return is going to reduce the balance. And in some cases, hugely reduce the balance. Then there's going to be an adjustment made in the system. And so it'll adjust out not just the balance, but any penalty and interest that corresponding to the unpaid balance, or at least it should. I've had situations where they've adjusted the tax and reduced it to where it should be based on the original return. And yet the computers don't always pick up the adjustment on the penalty and the interest. In fact, I have a case that I took on very recently to that effect. And so that's part of the reason the gentleman has come to me. He said, look, I know the tax is paid in full. I said, it is. I said, they just didn't adjust the penalty and interest. And he's got a bill for $60,000 or something like that. So we're working getting that adjusted.
Now, what about a scenario where someone finds out that the IRS had already filed returns for them?
Well, that sometimes that does happen. People don't realize the SFR's been submitted because all the information is being sent to an old address, and then they finally say, okay, I'm going to go ahead and I'm going to file the original return. I've had that happen in a number of cases where they come in and go, I just can't sleep anymore. I just want to get this taken care of. Well, the thing is this. I'll pull transcripts. Our office will pull different types of transcripts and documents that the IRS has. So we'll be able to identify before we submit an original return if an SFR is unbalanced. But for people that don't know that and don't engage somebody like us that can figure that out for them, it's a situation where they'll probably get some type of a letter and saying, look, we received this return, or now that we have the address on this return, they'll start sending bills to that address, the old SFR, even if they haven't processed the new return, and people are scratching their heads going, wait, what's going on? This bill I just got, 2 months after I filed the return shows total tax due of blank amount. And I'm looking at the return, it's like half of that. And so there's a situation where there's that confusion. But again, it's one of those situations where we'll figure it out. We'll sort through it. And usually we'll almost always pull the transcripts before we submit any type of original return, just to line up a lot of things, not just whether or not there's an SFR, but we have to check and look at the income reported for that taxpayer to make sure it's accurate to their records as well.
Makes sense. It makes sense. Is there anything that people often misunderstand about, what those IRS filed returns really represent? Is it a...
Now they know it's income that just didn't get paid. I mean, it didn't get reported, and obviously in situations where they hadn't made tax payments, or at least sufficient tax payments. One thing that is somewhat unusual, and for people that at some point say, look, I've got a lot of bad situations going on financially, not just the IRS, but I have other bills, expenses, and so forth. Things are going on. I'm thinking of filing bankruptcy. And I'll say, okay, well, our office, we don't do bankruptcy here. We can always refer that out if necessary. But I'll say, well, you keep in mind that if a SFR was ever filed, okay, whether you replaced it or not with an original return, if the IRS has filed an SFR on your behalf, that particular year, that tax period or year, that's not dischargeable in bankruptcy. It's just something that came down a number of years ago from the Supreme Court. So a lot of people say, I went through bankruptcy, and I got rid of medical bills, and I had old car loans and credit cards and all the things that people get rid of in bankruptcy. And I was saying, yet for some reason, this tax debt was, because any tax debt to be dischargeable in bankruptcy at a minimum has to be 3 years old, and by 3 years it means 3 years on the books. And they'll say this tax debt's 8 years old, and none of it went away. and I can't figure it out. My bankruptcy lawyer can't figure it out. Well, I pull the transcripts and I say, well, guess what? This was an SFR. And because of that, it was rendered non-dischargeable in bankruptcy. And they, well, I didn't know that. So, well, if you'd called us,
That's
you
right.
might have found out. Exactly. But I think most bankruptcy lawyers know that because it's a big part of bankruptcy for many people is tax debt. But nevertheless, that's a situation, and that's something that people need to keep in mind. So the most important thing you can do with an SFR, if it's going to make a difference, and as I say, 98% of the time it's going to reduce it. Some cases by a tremendous amount, other cases by very little. But it just kind of depends on their particular situation.
Got it. Oh, that's good stuff. Brian, thank you. We're up against time here, but as always, I enjoyed our chat, and I look forward to seeing you again in the future.
Thank you.
That's it for today's episode of the IRS Debt and Audit Podcast. If you want to learn more about Brian Loughrin and his work helping individuals and business owners resolve serious IRS problems, visit his website, TampaTaxRelief.com. Thanks for listening. I'm Sean O'Connor, and do us a favor, give a thumbs up, share an episode with a colleague or friend, or subscribe. That'd be even better. Have a great day.
Thank you.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.